Hey there, traders. Good afternoon. How's everybody doing today? Hope everybody's doing well. Today is Thursday, August 3rd, 2017. Let's get started with today's market profile review. So, pretty much today, the market was really quiet. Very little trading opportunities as the market is waiting for the non-farm payrolls, which is due tomorrow at 8:30 in the morning. So, we're going to be pretty busy tomorrow putting in a possible bracket trade um, in gold and the 30 year. And I think what I'm going to try to do is to try and get long the S&P 500 just prior to the news, and maybe add to the position um, as the market moves higher, which is something that a lot of traders think it's unorthodox and something that you shouldn't do. Adding to a winning position. But on situations like we're going to have tomorrow, I think the market's going to cheer whatever comes out of the non-farm payrolls, and we're going to get a rally. I don't think we're going to get a rally right away. I think as soon as the market opens at 9:30, we should take off. So that's my prediction for the non-farm payrolls tomorrow, bright and early in the morning. So let's take a look at some markets here. So taking a look at the S&P 500. Again, very boring trading, very little volume. Taking a look here, let's see. Let me get my drawing tool set up here. Perfect. We're trading in an inside day, and we have a special strategy for when we trade inside days. And the idea is to get short the highs and get long right at the lows, and that actually worked out really well here. Unfortunately, this happened to this drop to the lows happened way too late in the day, and I decided I'm just gonna cancel my orders, and maybe I should have let them sit there for a little while longer. End period right here. We can see those single prints. We have three single prints, and getting long here as around 66, just a little bit above 66, 67 to 66. That actually worked out really well. I mean, the market traded all the way up to 24.72. Unfortunately, I gave up on the market and I said I'm going to cancel my orders. It's way too late in the day. This all happened around 3:30, 3:45 p.m. Not too long ago, so it wasn't anything of interest for me. I like to take my trades early in the morning and let them run until we hit targets or all day long, and try and see what I can squeeze out of the market. So here in the S&P, we had an inside day, and the idea is to be long below value, short of a value, with single prints being the key trade locations, which we did get right there. And the market should trade higher, revert back into value, and maybe even trade to the other side, to the highs of the day. An inside day is simply when we have a profile or a current intraday range that is trading inside of the previous day's range. So you can see here's the high of yesterday's range, here's the low, and we can see that today's high and today's low was inside yesterday's range. That's what is called an inside day. Other than that, we were trying to short 75 to 76. The market never made it. Plenty of resistance up here, but what I think is happening here is we're loading up the boat. I mean, here they were getting long, here they were getting long, here they were getting long. We could see some sellers. I think these are all different positions for the non-farm payrolls tomorrow. We have a wedge pattern, and tomorrow is going to dictate where we go. I think we go higher. There's really no catalyst. Even if we get the exact amount of jobs that is determined, that we're looking to get, I believe it was 166,000 new jobs. That's the consensus. Even if we get the exact number that's on the consensus, right? Or even if we get a higher number than that, we're gonna rally. Um, we're in a market environment with low volatility. There's no fear in the market. I think that's gonna play into tomorrow. Um, with little volatility, there's maybe 1 or 2 days that we get big rallies, right? Number one being the non-farm payrolls, and number two being the FOMC Wednesday economic reports. The FOMC is monetary policy. Monetary policy. So that was the plan, and we were also trying to get long 66 to 64. We didn't quite get there either. So today, pretty consolidative D-shaped distribution. Inside day, there was really nothing to do in the S&P 500 today. So we had our orders out just in case, but we had a feeling since very early this morning that probably nothing would happen. Okay, taking a look at the crude oil market. This one's another late trader. I canceled my orders around 2:30 p.m. because there's very little volume post settlement trading in crude oil. Crude oil market opens at 9 a.m. and it closes at 2:30 p.m. There's still trading to be done before 9 a.m. and after 2:30 p.m. But the volume that trades during those post-market and pre-market is very small and can sometimes not produce anything at all. So I canceled my orders, but I was looking to get long 48.75 to 95 and looking to get short 50 and a quarter to 35. So 25 to 35, above 50, below 49, 75 to 85. 75 to 85. And I say this one's a late trader because lo and behold, the market did drop. It entered our area right to the tick and then reversed. It didn't reverse much, again, because it didn't happen intraday, right? It happened after the market closed. So, this one, I wouldn't have taken it anyways because I know in the after hours, post-settlement trading, there really isn't a lot of range. But it just still goes to show that these market profile levels that I mark up are extremely valuable and you need them in your trading. If you struggle trying to find the low and the high today, the market profile is the strategy for you. I mean, this is the best way. This is how we make the most amount of money. Okay? Most amount of money with the less amount of trades. Okay? If every single day you could catch the low of the day and sell it at the high of the day, you're golden, right? You're making a huge profit on 1 or 2 trades. There are people who place close to 10 trades per day, and they make a lot of money, but they also are not as efficient with that money because they're spending a lot in commissions, right? If we could take 1 trade per day at the bottom of the day and sell it at the high of the day, our commissions become very small, but our profitability becomes a lot bigger. And there's this little misconception. People think that you have to trade a lot in order to make a lot of money, but that's not true. That's a lesson I learned. If I can take 1 to 2 trades and make a large amount of money with those 1 to 2 trades, it's almost easier to do it that way rather than over trade and take many trades to make probably as much, right? Believe it or not, you might think, hey, Raul's sitting behind his desk, he's got the air conditioning, he's got the nice comfortable chair, and he's got the skills to make money, and it's easy for him. But truth of the matter is, every single trader gets exhausted. Okay, it's a lot of mental labor, right? Intellectual labor, not so much manual labor, but intellectual labor. And the thought processes that go behind all of this, where we enter, where we exit, it can take a toll on you, especially if you're over trading. If you're over trading, you're bound to lose money because, like I said, it's just a mental fatigue that's gonna hinder your trading decisions. With the market profile, we take 1 to 2 trades, maybe 3, 4 trades on different separate markets. Maybe one trade for each separate market that we trade, and that's it, right? We're not over exhausting ourselves, and we, keep the party going by consistently delivering profits. And I certainly can't do this without the market profile. And you also could be as successful as I am trading the profile. So here in crude oil, I mean, just another great example of how precise the market profile tells us where support and resistance is. Right here, perfectly placed area. That's where the market finds resistance, support, and we don't trade any lower than that. We just bounce off that area. It's really amazing stuff. I mean, you'd be surprised. It, a lot of people say, I make trading look easy, but it's not easy. You got to know what you're doing, and with the market profile is how I make trading easy, because I know what I'm doing with the market profile. I know where I want to buy, I know where I want to sell, and this is what's, the market profile is what's making, my career, in a sense, right? This is how um, I live, right? Taking these trades, and not just any trade, market profile trades. It's pure consistency. Okay, looking at gold, we were trying to get long early, and I highlighted it in yellow because it was a bit hang on here 1 second. I highlighted in yellow because it was a little early, and the market had already entered that area prior to me coming in early in the morning and seeing what levels I like to trade. So when I took a look here, we had already traded in it. So the best way I can show you is through the hybrid view. And here we can see through hybrid view, we have both the profile, a volume profile, we have candlesticks, and even if we zoom in, you're going to notice that inside the candlesticks, we have these, scales. It looks like scales. The closer and closer you get, suddenly you get these little numbers. And inside each candlestick, we have an order flow footprint infused. So we can see, how the day is trading, and where the larger volume trades and the institutional trades are inside each candlestick. For example, if we take a look at this bar, we see orders on the ask on the right side of the bar, or the green side. On the red side, we can see orders that were executed on the bid. And we can see here that we have these blue highlighted colors. These are your institutional buyers. And every time we see these blue highlighted colors, it means that, some institution or someone came into the market with a large enough order to cause a bit of slippage to the upside. And we track that slippage and we highlight it in blue. That shows us that, somebody was really interested in this area and put a rather large order at these levels. Same thing with these yellow highlighted. areas. We can see it right here. That would be your institutional seller. Someone sold enough product to move the market, right? So we can see what they're doing, and just wanted to highlight that feature of our software. But coming back here to the hybrid mode, we can see we wanted to get long here between 66 and 67. This was a level that I've been talking about for maybe a few days already. We were looking to get long 66 to 67, and then we were trying to get long 63 to 61. 63 to 61. Early in the session, we see that there was a big sell, possible little mini market crash here in gold. I mean, it went from 72 all the way to 63 in almost an instant, and then came right back up, running stops on the way down. And we can see here, there was definitely some big institutional, large order flow being executed to the downside and then being bought at the bottom, which is why we have a tail right here and right here. They were buying it pretty big. So as you can see, we entered that area here, and then we also did it right here. But that was around 4:30 in the morning, right? I'm not up at 4:30 in the morning trading. I don't know about you, but we entered that area at 4:30. We tried to get into it again, but we were trying to do it small with 2 contracts. But as you can see, the market, as soon as it hit this area, in a normalized market, right? This sell-off here is not normal. This is machine driven, or someone with a fat finger pressed the sell order at the market, right? Causing the algorithms to go crazy and start selling and then start buying once they drove the prices down low enough. Here, this is more normalized, right? You don't have like a huge tail. You don't have a huge move lower with a tail as it comes back up. So this is normalized. So a normalized support area, 66 to 67, worked out perfectly. We were trying to short 78 to 79. Of course, we didn't get there fast enough. So gold has been a little tricky to trade lately, and it's been a bit tough, right? We place our orders, but we find ourselves not getting filled. On this day and on this day, we were extremely close to getting fills, but we were just a little bit too good for the market. Today, same thing, I guess. Our levels were just a bit too good, and we did not receive any fills. Now, my only trade of the day, believe it or not, I took only one trade, and it was extremely small in the Nasdaq futures. So looking at the Nasdaq futures, we were looking to get long 58, 70 to 75. We were looking for 70 to 75. We were looking to short 59.30 to 35. And our first level that we got long was at 58.90, 90 to 95. 90 to 95. I actually got long at 92, and I only sold my position for 9.25 points. At the highs, the my equity curve was at maybe 10.5 points profit, maybe at the highs. So here's my order, literally just one contract. 58.92 long, sold at 58.96.25. So that's 4.25 points. I literally made just $80 on this trade, and $80 overall. So as you can see here, they reset it. Okay, so that happens sometimes. After the close of the market around 4:30, they reset the P&L. But the P&L for today was literally just $83 after commissions. So very slow trading overall. We I almost got filled on my second contract. That would have made a pretty good trade here. Around, I was looking to get filled at 74, and you can see prices almost got to this area, but they came within close proximity and then reversed. Um, and that would have been a decent ad. Would have had me somewhere in between here, between the 85 area, and then from 85 to 96. That would have been 11 points. That would have been a better profitable trade. 11 points on two contracts is, I mean, how much is that? So that would be about $400 in profit. So that would have been a better day, but a profit is a profit, whether it's $1, $2, or $80. It's better than being down $100, $200, or even $1,000. Very slow day. Like I said, really, there wasn't anything to trade, and I think the market is just waiting on tomorrow's non-farm payrolls in order to, you know, in order to activate the market again, because we've been pretty dead for quite some time. Alrighty, guys, that's all the time I have for today. I want to thank everybody for watching. Please don't be shy. Swing by www.themarketprofile.com, where you'll see me trade the S&P, crude, gold, the Nasdaq futures, 30-year bond, and any other futures contracts that you like and that I may not trade. Maybe you like trading the Russell. We'll take a look at the Russell futures. Maybe you like trading soybeans. We take a look at those. Maybe you trade currency futures. We take a look at the euro and the yen. If you want to take a look at the British pound, Aussie dollar, literally any currency futures, we can take a look at those. If you like trading the 10-year, 5-year, swing by the market, www.themarketprofile.com. Sign up for a free 14-day trial. I want to say that we're a really nice, active community, and we definitely appreciate everyone's availability. So just come and swing by, have a conversation with me personally, live in the room, and I answer everybody's questions in a timely fashion, live, real time. And we could even schedule a one-to-one mentoring session where I could help you out with your trading, no matter the account size, no matter your trading level or experience. I could definitely help you guys achieve your trading goals. I certainly wish I had a mentor like myself when I was learning how to trade, but thankfully, I have the drive. I had the drive to continue on and learning this stuff on my own, and I've become pretty successful, and I want to help out all those traders that were in my shoes before I found the market profile and became pretty successful trading. So definitely come by. Let us see how we can help you. www.themarketprofile.com, and I hope to see you guys in the room. Thank you guys, and have a great evening.